as the results here are concerned, I mean, they were absolutely fantastic, but we expected them to be really good, right? They pre-announced back in March, and you look at where the strength has been, it's really been on the client computing side of things. And, to the point referenced earlier, what the street really cares about is what the performance is going to look like on the data center side of things. And that group fell, 20% this quarter. Our view here is we expect significant competitive pressures from AMD specifically here over the next 2 years. And, despite the fact that you've got a new CEO at the helm, bringing some excitement to the company in hopes of a turnaround, we really do think, market share loss is going to intensify within that all-important data center group here over the next 2 years. And that's really going to hurt any, potential turnaround efforts, at least, over the next 6 to 8 quarters.
Right. What about ramping up production for chips? Do you think their plans there are ambitious or realistic?
Yeah, I mean, as far as, CEO, Pat Gelsinger's intent here to kind of redefine the company via what he's defined as his IDM 2.0 strategy via the kind of the creation of Intel Foundry services. I think that's the right move. I think that's the move he has to make. I think, that they'll be able to gain some traction in terms of some of the more trailing edge technologies. But when it comes down, when we start seeing some of these supply constraints start to ease going into 2022, it's going to be very difficult for them to compete against some of the, the likes of Taiwan Semi and what have you. So, I think it's the right move here. But again, it's going to take a lot of time. And also, I'll tell you this, it's also going to be negative towards their margin profile, and that may not be the best thing out there for investors. Also, on top of that, it's a highly capital-intensive business. So in terms of the free cash flow potential, may put a dent there here as well.
Yeah, and margin erosion could be punishing for the stock as well. NVIDIA, if you were to compare NVIDIA with Intel and their newly launched new data center CPU, how much of that would be a threat for, the data center business, the performance there sliding further from here?
Yeah, no, I mean, time will tell with that. I mean, as far as NVIDIA's chip, that won't come out until 2023. So we've got another 2 years there. That's going to be run on ARM technology. So when you think about the data center space in general, essentially 99% of the market is run off of the x86 architecture, which is, dominated by Intel and AMD. So it'll be interesting to kind of see if there is momentum and demand for NVIDIA's chip here. We do think they're going to actually be able to make a dent here in the market, but we don't really believe that they're the bigger threat at the moment for Intel in terms of the CPU side of things. It is going to be more AMD, at least here over the next couple of years.
So in that light, do you think that the stock will continue to underperform from a price to earnings forward multiple of nearly 15 times? Your 12-month target here is $70.
Yeah, I mean, as far as Intel and the chip space in general, our view is there's probably better places to be than Intel. We do have a hold recommendation on Intel. We'd rather be, if you're looking at the cloud side of things, we'd still rather be in the growth-oriented names in terms of both NVIDIA and AMD. But we just think there are better ways to play the chip market today than Intel, especially after the run it's had here this year.